let's take a global perspective and dimension to this, because as soon as the communique are read, almost always the central bank governor will speak to the external developments, and we all know that the external is as important as the domestic. Robert, you're just coming through. Take us through what are the basic external developments that you think should weigh on these considerations today.
Thank you very much for that. We think that the most important external development that the committee will be considering for their decision today will be the outlook on interest rates, most especially. You notice that I think it was during the week or last week that the U.S. Fed, I mean from the chairman, Janet Yellen, read out that as against the speculation that we may likely be seeing a hold on tightening, that the Fed will not be considering, a possible hold on tightening, that we may still expect a further hike in interest rate. I mean, before the end, we'll still see an interest rate hike before the end of the year. So it appears that from the developed markets, or what you would call very important central banks within the global space, we are still expecting that tightening will be the course, at least for now. So the import of that for the committee is that, for emerging markets and frontier markets, especially where we fall, it's the most difficult or the most important consideration for any investor that is looking at this market is to see what impact their investments will be in terms of exchange rate differential. So already there is an exchange rate risk on the back of the fact that most emerging economies are dependent on commodity exporting. Good enough, we've seen some stability in global oil prices, and the outlook is still looking somewhat positive for the economy. So, but now we do not think that a major consideration of this committee will be looking at a possible maybe easing at this time, given that from the global space, it still appears
very interesting. Yes, the Bank of Japan is also deciding to hold rates. Our friends in nearby Ghana just finished their meeting, and the living rates unchanged. Even though South Africa did a rate cut last time, a few weeks ago, they also decided to hold rates. So, Tajuddin, what does this mean when we look at, and it touched on a very important part of the entire consideration, currency is very key. Whether it's from Brexit to the Eurozone, currency is king. The US dollar has been strong since the 2017 started, and you can see financial inflows into that particular economy. So how do you think this will be a major consideration for Nigeria, considering our Eurobond, considering our balance of trade and other things?
So one key factor, if we take out interest rates, which has been spoken to, which is key in terms of what they do in the US, another key factor is the outlook for global oil prices. So if we put in perspective what we had as the outcome of the OPEC meeting for last week, so there was a call, for Nigeria to, for OPEC to consider Nigeria cutting its own output too, which is a key consideration in terms of capital, the ability of the government to generate revenue and also to execute the budget. So as we speak, oil prices are moving in positive direction, in our favor at about $57, $58 per barrel as we speak. But production is about 1.7 to 1.75 million barrels per day, which is substantially below the 2.2 million barrels per day budget for 2017. So the outlook for global oil prices is one of the considerations that I believe they will consider today. It is positive, yet there's a bit of a downside risk from a production cut standpoint, particularly given the fact that Iran spoke to OPEC at the last meeting that Libya and Nigeria should also consider cutting down production. So that's a point of consideration for the MPC.
Pabina, look at the balance of trade. Thank you, Tajuddin. Look at the balance of trade. Do you think the MPC will be comfortable with the last data we have from the Statistics Office regarding our external balance position as far as our capital importation in terms of inflows into whether it is other investment or portfolio investment and other things?
Okay, I think they will be relatively satisfied with that level. As you can see, the development in the currency market has been one that has been improving since the setup of the I&E window. So it can only just get better from here on. That particular market is really finding a structure. We are seeing healthy volumes being traded there every day. So it goes a lot to say that Nigeria might have or could be finding a very strategic way to deal with its currency problems. Still early days, but I think it's good development. So that in itself can be a source for attracting foreign flows into the country. Tajuddin has spoken on the oil side, and we think so far it is looking okay, pretty okay. So I don't think the MPC would be too worried about the currency situation right now. Robert touched on likely hike in the U.S. rates. I think that would be a key consideration for the MPC at this meeting as well.
Okay, let's get a view from Dr. Okete in our Abuja studios regarding the interest rate decisions by the central bank and, of course, our peers across the continent, South Africa and Ghana. Dr. Okete, what's your view about Ghana and South Africa leaving interest rate unchanged at this point? And do you think the U.S. remains a barometer, a very key one for these emerging markets, in Nigeria inclusive?
Yes, the U.S. Is still the U.S. interest rate is still very important, and it does influences the decisions that frontier market central banks across the world make. I think from emerging countries or frontier markets, if you like Nigeria, Ghana, South Africa, I think the focus is usually first on our commodity prices. Then I think for the purpose of international portfolio flows, yes, we'll also consider the interest rate set by the U.S. There's no doubt, because even in the last conclusion of the Monetary Policy Committee, the Central Bank Governor, Godwin Emefiele, had mentioned that a resumption of normal monetary policy decisions in the U.S. would definitely have implications for the conduct of monetary policy here. But today, I think the consensus is that they will hold the rates. But having said that, I will not also be surprised if there's a symbolic 0.5 reduction in interest rate, even though it will take the interest rate into further negative territory. I will not be surprised, but I think my take is that they will still hold the interest rate because of all these considerations.